If you're an Applied Digital investor, the next few weeks could be crucial. APLD reported one of the strongest quarters in the company's history. Revenue exploded. It secured billions of dollars in contracts, but Wall Street thinks this stock could more than double. With APLD stock still trading around 50% below its all-time high, is Applied Digital a good stock to buy now? In this video, I'll try to answer that question and look for the best entry point. Remember that I'm not a financial advisor and this is not financial advice, but if you appreciate these videos, then don't forget to like and subscribe to the channel. I'm aiming for 500 likes, help me hit that goal. Now let's get straight into it. Looking at the very long term, we are still well within the long-term upward trend. This chart goes all the way back to the beginning of 2025, and during that time, Applied Digital has repeatedly respected the same major support and resistance levels. This rising support line was originally a key resistance level, with APLD stock being rejected multiple times in 2025. Here in February, then June, and again in August before the stock eventually broke through that in September last year and ran all the way from $13 up to $40. It took just 1 month for the stock to drop all the way back down to this level, but this level has been proving to be a strong support level ever since then. One thing that stands out is how reliable the lower trend line has been. Every major correction over the past 12 months has eventually found buyers near this rising support, and each time the stock has gone on to make higher highs. APLD briefly broke out of this trend in June and reached a new all-time high of $50, but with the latest pullback, it's following the same pattern, suggesting the long-term structure remains intact. Another encouraging sign is that the recent decline has brought the stock back into an area where buyers have consistently stepped in before. Rather than making fresh lows, price is continuing to form higher lows over the long term. That's one of the defining characteristics of a healthy uptrend and shows that the long-term demand is still increasing over time. What's more important is whether those corrections break the overall trend. Applied Digital had this huge breakout move in 2025 and has been very volatile over the past 12 months. But this support level has been rock solid. Now in the short term, over the past 4 weeks, APLD stock has been trading relatively sideways, going in this channel between $26 and $32. Right now with the stock at $27, we are trading on the lower end of this, but once again, this has proved to be a solid support level. On the one occasion that Applied Digital stock dropped below the $26 support, here on Wednesday, July 29th, it dropped all the way to $23, but within 24 hours, it was back to $27 again. This shows that even with all the uncertainty in the market right now, Applied Digital is trading very close to its base support level. And although there is nothing at the moment to suggest a breakout move, we know these things can happen very fast. All it takes is one catalyst and this stock could fly. Which leads me on to something very interesting, because it seems like Wall Street has spotted something that retail is missing, because there has been a bunch of new analyst upgrades this week. Looking at tip ranks, we can see that Applied Digital is covered by 8 Wall Street analysts, and they have given a consensus price target of $74. There was a high price target of $90, while the lowest target is $37.50, which is still hugely above today's current price. APLD has 0 sell ratings, 1 hold, and 7 buy ratings, while overall the stock is rated as a strong buy. Several analysts have updated their targets in the past 2 days, with analysts at Needham, B. Riley Securities, and Northam Securities issuing price targets between $75 and $83. As we can see here, this is huge upside from the current price, with several analysts citing the company's sizable contracted backlog, expanding pipeline, and future revenue expectations. While Needham analyst John Todaro also points to Applied Digital's disciplined power strategy and favorable lease economics. In his view, the firm's execution capabilities create a meaningful moat in a fast-growing market, justifying the target of $83 and reinforcing his positive outlook on the stock. Now, there's several reasons to be bullish on Applied Digital, both from a technical point of view and a fundamentals point of view. Their financials are also extremely strong, which I will talk about later in this video. But from a fundamentals point of view, we can see the strong fundamentals very clearly when looking at the investor's presentation. Since a strategic pivot from blockchain to AI data centers, Applied Digital has gone from strength to strength. They have secured $36 billion in contracted lease revenues, with the potential expansion up to $86 billion if all renewal options are exercised. And we can see a breakdown of this here over the next 15 years. Applied Digital is well positioned for sustained long-term growth through repeat business at existing campuses and portfolio expansion into new sites. The company expects to deliver approximately 500 megawatts of critical IT load per year as market conditions remain. Assuming continued strong demand, Applied is on a possible path to 3 gigawatts of total capacity within 5 years. The compute curve is steepening due to heavier workloads and the rise of agentic AI. Now, if you're looking for stocks that are very closely tied to the agentic AI boom that is still at its very early stages, then check out ServiceNow. I covered the stock a few months ago when it was just $90. Today, it's up almost 50% at $130. This is a stock that has so much upside. There is a link to that video in the description and the pinned comment. But if you would like to see an update on where I think ServiceNow is going next, then let me know in the comments. Overall, this AI boom means more GPUs, more power, and at a time when less than 10% of facilities can support 50 kilowatt density. This chart highlights the rapid growth in hyperscaler AI infrastructure spending, with total capital expenditure projected to exceed $700 billion in 2027, driven by continued investment in AI factories and data centers, with Amazon, Microsoft, Alphabet, and Meta remaining the largest investors. Hyperscale capex is bigger and faster than any mega project in US history. There is now more money spent on this AI boom than all the largest infrastructure projects in the US over the past 100 years combined. And Applied Digital is front and foremost to be taking advantage of this. On July 27, Applied Digital reported their fiscal fourth quarter and full year 2026 results. This is probably the company's single most important earnings report in recent years because it comes at a time when APLD stock has dropped over 50% from its 52-week high. For Q4, Applied Digital recorded revenues of $258 million, up 407% from the prior year. Their net loss was down 108% to $110 million. Adjusted revenue of $240, adjusted net income of $12.9 million, EPS of 4 cents, and net operating income of $39 million. Overall, it was a very good quarter despite the stock tanking. But the fourth quarter results really stand out when we look at the full year overall. Revenue of $611 million was up 167%. There was a net loss of $249 million, adjusted revenues of over $500 million, EPS of 11 cents for the year, and net operating income of $90.4 million. So think about this for a moment. Applied Digital has just had an incredible quarter. Over 40% of the full year's revenue came in that final quarter, while they posted back-to-back positive EPS quarters for the first time. Although their earnings per share was less in Q4 than it was in Q3, revenue has more than doubled from the previous quarter. Naturally, we would be hoping that EPS would increase in line with the increased revenue, though it's a slight concern that it hasn't, and we'll take a closer look at that in a moment when we look at the actual financial statements. But first, let's look at Applied Digital's huge recent highlights. They signed a 15-year lease with a new US-based high investment grade hyperscaler for 300 megawatts at Delta Forge 1, worth approximately $7.5 billion. Then they signed a second 15-year lease agreement with the same hyperscaler, worth another $7.5 billion. So that's $15 billion of contracted revenue that is set to commence in 2027. Applied Digital secured billions in funding and also completed the separation of their cloud services business, combining it with Exobionics Holdings to form Chronoscale, This is an independent, publicly traded company listed on Nasdaq, ticker symbol CHRN. Now, looking at the actual financial statements. Starting with the balance sheet, we can see that Applied have a very strong balance sheet. They have total assets of 9.9 billion, total liabilities of 6.1, and total stockholder equity of 1.7 billion. This is a huge improvement over 2025, where total assets have increased from 1.8 up to 9.9 billion. However, total liabilities have also increased massively. From just 1.2 billion last year, it is now $6.1 billion. But the majority of this, almost $5 billion, is in long-term liabilities, needed for the massive, rapid expansion over the past year. Overall, the balance sheet is strong, but what about the income statement? We can see here that Applied Digital's total revenue has increased year over year, from 165 million in 2024, 228 million last year, and now $611 million in 2026. This is massive growth. However, this growth has come at a massive cost, and their overall net loss has increased from 233 million up to 250 million for the year. But there are two main things that worry me. This loss could have been worse. This loss could be over 300 million only for the gains on derivatives and investments listed here. My second concern is here, selling, general and administrative. This is due to a massive increase in stock-based compensation, primarily due to an increase in shares awarded related to the increase in headcount as well as performance stock awards. $198 million of stock-based compensation is a lot in a single year. So while Applied Digital certainly has risks, the bigger picture remains incredibly interesting. The company is sitting on tens of billions in contracted revenue. Demand for AI infrastructure continues to accelerate, and APLD is still holding its long-term uptrend. At this point, the key question isn't whether the opportunity is there for Applied Digital, it's whether Applied Digital can execute and turn that demand into sustainable profits. Wallstreet analyst ratings and price targets seem to suggest that they will be able to do just that. But guys, what do you think? Are you buying, holding, or selling Applied Digital? Let me know in the comments. I'm not a financial advisor and this is not financial advice, so always do your own due diligence. If you enjoyed this video, then help me hit my goal of 500 likes. And if you want to see more content like this, then subscribe and I'll catch you in the next one.